Okay, this is my first video in this new YouTube channel. My idea today was to present the situation in the financial markets. This is more or less what I'm already doing in social media. But so many people have encouraged me to do it as well in YouTube channel that I will do it so that we can share this. My idea is not to produce videos of more than, let's say, 5 minutes. And so every day, not every day, every week, more or less, we will try to review one of the different subjects that might be interesting in the financial markets area. Okay, today we will be reviewing the situation of the Dow Jones Index, which is a very interesting one. So as you see here, you have the situation, the charts for the Dow Jones since more or less 2005. And as you see, we are in a very weird environment. So we retraced from almost 3,000 to more or less 18,000, which was the reaction of the market to this new COVID situation. You have to understand that this coronavirus, from the macro point of view, there's not much to analyze. It is terrible because you will have more than 30 million people unemployed in the US. You will have retail sales going down. Most of the industrial and retail companies will have terrible quarters, especially second and third quarters. I suppose service companies and touristic companies in the US and the rest of the world will have terrible figures for this summer season. So all this we know. So it is a very similar situation to the one we had in 2009. So the data were terrible, but the market rebounded very sharply. As you see here, the market in 2009 rebounded from a minima around 6,500 to a maxima around 11,000. What does it mean? The market is now really looking to the future, discounting when we will have a new vaccine, when markets, different economies will be deconfined, and so many other things. But from the macro point of view, the data will continue to be terrible, with no doubt. So the most important here is not the macro. The macro will continue to be very bad. The most important thing is how or which is the macro, the situation that the markets will finally discount. I have to say that, of course, what we had during the crisis, especially in March, what we had, it was a terrible sell-off in the markets, accompanied with a lot of volume. So this is the typical figure that we will see when we have a sell-off. So as far as this, the rebound of the market in April was normal. What is not really normal is that the market had rebounded so sharply. Is it the moment to buy? Very difficult questions. If we were talking about European markets, I will tell you for sure not. Talking about US markets, we have November elections, and normally elections are bullish for the markets. So that means that we have, in a certain way, markets will be very reluctant to sell in the short term, and normally what we will find it is a very volatile, I think, market with the president making a lot of new announcements, trying to keep the market more or less controlled, more or less stabilized around these levels. But the macro is so bad and it's continued to be so bad in the near future. If we go beyond this figure of 30 million people unemployed, etc., if we go, for example, for many companies that are now giving support, not especially to the Dow Jones, but especially to the Nasdaq, we will talk about the Nasdaq another day. If we see all this, we will understand that at a certain moment, these Nasdaq companies will suffer from this recession that is going to happen. Because, I mean, I don't know, for example, Tesla cars is now in maxima, but of course, Tesla cars are going to be affected by this crisis because now so much people around the globe are going to be able to buy these quite expensive Tesla cars when we'll have more than 300 million more people unemployed in the world. So what we should expect? We should expect markets very volatile, probably with downward bias. In any case, there will be sharp rebounds that might be, as you see here, the maximum levels of the resistance here could be these levels around 27,000. But I will recommend everyone to keep liquidity. I think you will have much better opportunities to buy. What happens as well in 2009? Finally, the market at the end retrace a little bit. I think it's much better to act according to the trend. And now the trend is not really bullish. What has happened is that if you see, the market broke this bullish trend and now is trying to redefine what could be the second butterfly level of this trend. So that means that normally it is too early, in my opinion, to buy. You have to have liquidity in order to buy when the prices are lower and better for the investment. And especially you have to be very, very careful, because I think markets have not finished the risk levels.